All right, so today was the sell-off on multiple markets, and I went over, I think it was gold, but I want to also go over crude because this is something that is so classical that, I mean, it happens over and over again, so you just have to be ready for it. And this is very classical. I mean, this is exactly how, even how Wyckoff explained, and many Wyckofians who know what they're doing see this all the time. All right, so the first thing is trend, right? Because what we're trying to do is get in on the pullback. In order for you to get in on a pullback, there needs to be trend, etc., etc. All right, so we see this market went down. It had a breakdown right up there. Where it says BD means breakout, breakdown. And then you see this break has a lot of volume. Why? Because it broke this low. So obviously, the sellers. And we draw a little profile here, and you see that, you know, this is within that wick of the brick, you have this heavy volume area, right, where supply really exerted its strength. Okay, so now that we have that, we're seeing a pullback. Now I'm looking at this pullback attentively because I wanna make sure it's just a pullback and that's weak. And you can see 111. So I mean, it's not a change of behavior. It's just a pullback. And I want to see that because if there's heavy volume over here, then it could set up some other situation, and I don't want to deal with that. So all I see is the profile volume here, and I see the breakdown here, and then I zoom in and see the level and all of that. All right. After doing that, look at this. The 5-minute chart. So now this pullback is going to look like a trend on a 5-minute chart. So I'm watching the 5-minute chart and I see that, okay, they rally. And here the volume gets very high. All right. I'm just noticing that. Now, that's climactic volume, but it doesn't mean that it has ended. It's just a warning that to be on the lookout. So now it does this, and I start seeing that we are at the at that level with a shortening of the thrust. How do I know? I know. Pressure is decreasing. After that, do I go short? No. Even if it's at a level, no. I have to wait for supply to overtake. Right here, there's no evidence of supply overtaking. And believe me, these wicks don't mean jack. There's no evidence of supply overtaking yet. All right, the wicks, it's just a clue. All right, you need supply overtaking. Now, it's game over. Game over. That's the selling area, and they came in. Right in that area. Did some distribution here, all this sideways action. There's your change of behavior. All of that. Now they pull back. Pull back one more time. This right here is a lack of demand. You may call it the last point of supply. You may call it a lack of demand, whatever you want. But that's it right there. After that, it's game over. This thing is finished. And it initiates the down move. Okay. Okay, it initiates the down move from that point on, and you get like, I think it's only one break, but it's good enough. And here you have a some climactic volume. So that's just a warning. It does not mean, I'm just looking for that because it helps me identify stuff, you know. And they're done. So the move, it's not a gigantic move, but it's a good move. Right? What do you think? Really nice. Now, what is it that you learn here? You learn this is your change of behavior. This is your lack of demand. What else do you learn? You learn that the higher time frame had a breakdown, and this whole thing that looks like a trend is a pullback to test the breakdown. You also learn the importance of levels. So I've explained that when you're, in your process, just mark 3 types of levels. You just need to do these 3 and you're good. One is the supply-demand zone. The second is the breakout, breakdown. And the third is your volume profile. That's it. And you're ready. See, I mark this, and mark that. 1, 2, 3. And then, when price is going there on a wave chart, you're going to get clues in terms of ending action. You're going to get clues. But it doesn't mean you just jump on it. It just means that, hey, there's something going on the left-hand side, and you still have to wait for supply to overtake. When supply overtakes, like this climax was telling me something, because I know because they're coming near this heavy volume area. And then the SOT is telling me also because of that same volume area. And then finally they pop above it and dip below. And when they do that, with the change of behavior, it sets up the pullback and sets up the down move. And where do you get out? Like for me, you could either use predetermined, or you see a climax or shortening of the thrust, you get out. Right? This one way of just getting out. Because as I've explained multiple times on this channel, the left-hand side ends on 2 behaviors. They both represent extremes. The first extreme is climactic behavior, which is a big volume. And the other extreme is weakness, which comes in the form of a lack of momentum that is visible via shortening of the thrust. Now you can use other things also, but these 2 from a Wyckoff perspective would be climax and shortening of thrust. If you're one of those different types of trading, you will see the indicator have divergences. So typically when the thrusts are shortening, you'll see all your momentum indicators give divergences. But from a Wyckoff perspective, obviously he doesn't use the momentum indicators. So he looks at the thrust from high to high or low to low. So from Wyckoff, you need to know 2 behaviors on the left-hand side. This on the left-hand side, as the market is going, to be very aware of, that have a tendency to tell you that there's going to be a change of trend. That is climactic behavior and shortening of thrust. By itself, it means nothing. It can continue to go. But with other confluences, it becomes very meaningful, right? So what are the confluences? You have climax, shortening of thrust, you have that volume level, and then you have a change of behavior with a big volume. And then you have lack of demand. So all of that puts the turning point into perspective, and allows for the for you as a Wyckoff trader be able to see the turning point, right? So And now what you want to do is if you want to learn more, just go and read Wyckoff's courses. But more importantly, you need to just analyze the markets every day and trade the markets, and over time you'll get that intuition. What you should also have a routine where you know 3 things about your higher time frame. Whatever higher time frame you use, you need to know 3 things. 1 is the trend. 2, support and resistance levels. 3 is the volume profile level, or your time, whatever profile level. I think that's it. And then that creates the context, right? That creates the boundary, that creates the outline of your trade. Your outline of your trade, like you have, whenever you start something, you typically have a high-level outline of it. What is the outline of any trade is the higher time frame things that I've just mentioned here. The outline of any project, paper, whatever it is, right? So the outline of any trade is always your higher time frame context. And that outline is 3 things: trend, and the level, and support resistance levels. All right, take care, bye.